Good afternoon. This is Chris Brecher with Simpler Trading with the March 16th nightly video. What was today about? This is all about what we warned last week and early this week, is that if you saw the bond market rallying because of instability, which you saw on the right, and also people fears about the economy, that the NASDAQ would probably start rallying and outperform if the instability is somewhat contained, which is what you've gotten. So the bond market sold off a little, but as you see, when the bond market was here, the NASDAQ overreacted to the downside. That was the beginning of the year. Now the bond market is at the highs, and that's like the NASDAQ being at the highs where it is now. Now we got to see if that's a bull flag. Now, I'm not sure of that, but this is why it drives me nuts when a lot of traders and commentators say, well, this is predicting a hard landing, and then everything goes up. Why does it go up? Goes up because if interest rates were the thing that nailed the NASDAQ, if the interest rates go down or the bond futures go up, then the thing that was nailed by it and had its price sales and price earnings contracting, all of a sudden that's alleviated somewhat. It's more of a tailwind now. So even if you have a recession, all of a sudden the price earnings can expand, and you have the stocks like the Facebooks and the Googles that are going to have a great cash flow no matter what. And those are the ones that have been outperforming. The thing is where do the bond market go now? As you see, right now the bond market's on its yearly high. Not really because inflation has changed, but because of the whole bank situation. It's overbought, as you see right there. Doesn't mean it can't stay overbought. It's been overbought for a while. But the whole key now to me is if this rectangle is going to break up, even if it's overbought. That's a tough sledding. And let me show you why it's a tough sledding. Because on the left, I'm going to put the bonds, and I'm going to make it the same symbol. And on the left, I'm going to show a weekly chart. And what you see in here is definitely it's at resistance, a lot of resistance. So if it could get over this resistance and this rectangle, sure, it could go all the way to here. If it goes all the way to here, you're probably going to see the NASDAQ go all the way up and here. In fact, in the grand scheme of things, no matter how bad everything looked, the NASDAQ stayed over the 200. Well, reclaimed the 200. That's a weekly. And on the daily, it stayed over the 200. And it broke this trend line. So I'm going to put this as a trend line just so you have it longer term. Right here. There's your trend line. All the way there. And it held. So now what it comes down to is that I don't think that the bonds are going to continue up if Powell is at least hawkish a little. So basically what I think he's going to do is say, right now, not much, and then tighten sharply later if inflation hasn't abated. So this is a temporary respite. And let me show you what I mean by temporary respite. So a lot of stocks have a tremendous amount of technical damage. Usually when something goes straight down, it then tests the low on positive divergence. Yeah, it's hard to believe, but that's what the NASDAQ did. So you see it all the time in a lot of other things. Go and look at Deere. And we're going to take Deere on a daily chart on the left and a 4-hour on the right. And as you see, this stock got destroyed. Well, almost every time it's gotten destroyed and then comes back, I'm talking about really destroyed, it usually tests the low, and then that's the low. Like here. And I'm talking about major sell-offs. Like this. Look at this major sell-off. And it didn't really stop until it went to a new low on positive divergence. So this is a temporary respite right now. You have Deere that definitely is underperforming everything else in the tech space, and a lot of economically sensitive are underperforming because everybody's worried you're going to have a severe recession. So the way I'm looking at it is these definitely could have a rally, but then it's the second sell-off. Let's see if it has positive divergence. The same with USO or crude oil. Wow. Every time that crude oil has done something like this, it goes and tests it, and it successfully on positive divergence. Usually I take just crude oil. And crude oil, as you see in here, this definitely could have a absolutely sharp rally all the way to 73. But it would be more healthy if then it sold off on and worked off the overbought condition by staying either as a bull flag or going to a new low on positive divergence. So if we're going to trade these, we got to change our time horizon. It can be a couple of days, it can be a week, but I'm not sure the damage is done because look at the right. Yeah, you didn't really have a real whoosh of a down candle. They sort of tested. So you got to be extremely careful in here. So just keep that in mind. So what I'm going to do tomorrow is this. So you have a lot of stocks going up. Obviously, you see the NASDAQ going nuts. You have the E, and it's over the 200. Don't forget that. The ES is just got over the 200. The YM is at the 200. The Russell, and I don't think my pointer's working, is under the 200. And then you have like crude oil just way under. Way under. Not even close. In fact, it's so far it could have a reversion trade. When it gets too far from the moving averages, on the upside it comes back to here, and the same on the other way. So definitely that could come back. But what I'm going to do is look for the laggards that actually are trying to form bull flags now. Are they long-term ideas? No. But I like to reverse engineer and find some things that can be the leaders on expiration day. So the first thing I'm doing is I'm looking at something like Exxon. So Exxon on a 15-minute chart looks like an inverse head and shoulders. We call this a Stewie pattern. Because when you highlight it, it looks like Stewie from Family Guy. But you also see that this could be a bull flag. Now, when I put this on a 5-minute chart, it looks a lot more like a bull flag. Look at that. So what I decided to do was reverse engineer it. Now, keep in mind, this is exactly like what I just mentioned with Deere and crude oil. The stock has gotten destroyed. This is all about just working off, just trying to stabilize. Usually when it does this, it has one more test of the lows, but it still could try to go up to that 104 area. So what I did is I looked at this that looks like a bull flag. Then I went into 6 charts with 4 squeezes. And then what I did is try to find if Exxon, when it is a bull flag, are there any of these time frames where it shows up as a squeeze? Well, I didn't put it on the 5-minute, but guess what? You go and put it on here and put it on a 5-minute chart, and there are your dots. Yeah, there's your squeeze for you. So how can I reverse engineer it? Because we know a lot of these stocks are in a long-term downtrend, but we want to try to take advantage of sharp bear rallies. So first, you have the squeeze. Second, you have it over the 5-minute ATR trailing stop. So I went and did this. I did a scan, and you could take all of this off. All I did was take my main list. So obviously you could take off you can take off the last, because we're taking all my stocks. Open interest, we want to squeeze on a 5-minute. We want the close greater than the ATR trailing stop on a 5-minute, and nothing else. So we want a 5-minute consolidation, and the close is over the 5-minute. These are quick trades. They might be 1 hour, might be 1 day, might be 3 days, but that's it. And you'll see there are 12 stocks. So let's take those 12 and I'll show you what we're talking about. So I'm going to save this as a watch list. So here's your 12. Now keep in mind, there are a lot of other factors involved, but I'm going to be looking at these in the morning for cheap calls because bull flags have a measuring objective, like on my class. And also what they have is they usually resolve themselves pretty quickly, and you don't have a lot of time premium left in the options. So let's take those 12 and I'll show you what I'm talking about. So here's 12 stocks, 12 that have little consolidations. That doesn't mean they have to be bull flags, they're squeezes. So most bull and bear flags are squeezes, but not the other way around. So let's look at a 5-minute in these things. Thermo Fisher, sure, that could be. UNH, yeah, as you see, they're at the top of the chart. Maybe they are. There's some that have a tighter pattern than this. Right here. Tighter pattern. So let's take a 5-minute of all the rest. PANW. Not bad because it's so tight. How about CVX? Yeah, there you go. That could be a bull flag over the ATR trailing stop. CrowdStrike. That could be a bull flag. It was already up 4, but keep in mind that a lot of these stocks got really pounded, and this one hasn't filled its gap yet. So on any weakness, I'm going to look at the oil stocks. I'm going to look at Disney. Go check this out on a 5-minute. I'm long Disney. Consolidation. See the squeeze. And it's over the ATR trailing stop. And one more, Exxon. Same thing. So they all have 5-minute squeezes, and you'll see on a 15-minute chart, they don't look bad. So those are the ones I'm going to look at tomorrow to try to trade on the long side. Now, keep in mind that if the bonds are down like 2 tomorrow, all of a sudden that positive divergence of bonds over ES, some of that's going to run out of gas. So we're just going to have to see how that works and in the morning and see how things open. Now, keep in mind, tomorrow's triple witching, so futures expire, a lot of the options expire, but they do every day. But you get a lot of imbalances. And the reason is the S&P 500 rebalances their constituents every quarter. But they do it on triple witching day because that's the day every quarter that's the most active. So they think it can contain any extra liquidity that hits, that has so much liquidity that a ton of imbalances can be absorbed better. So that's tomorrow. I'm still trying to figure out which ones have an imbalance, but just as a hint, usually the ones that have the biggest buybacks have less stock outstanding now in the S&P, and they have to be sold. Think of Apple. Have a great night. Talk to you later.
Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.